Which do you think is the most important in order to win over the consumer? I mean, the battery factories you need to keep costs down, but how quickly can you build out the charging stations?
I would say it's a mixture in between. We need to scale up batteries, but we are good until 25 or so. We are heavily investing in fast charging, which is probably the biggest constraint on the customer front because of range anxiety still. There are some regions in Europe which are well covered. Germany is growing, but other regions we are really lagging behind, like Spain or Italy, and this is where our investment mostly goes. Mostly it goes into fast charging, and we're providing home charging devices. But step by step, we see that the situation will alleviate, and I would say we ramp up in parallel, battery capacity, EV capacity, and fast charging capacity. So far, it's going well. And we see, actually, EVs have won the race. All competitors are basically following us. So we feel confident.
I look across the investments and I see $29 billion for battery factories, $30 billion in the new software focus. Obviously, it costs billions of dollars to design these new cars and put them together. How are you financing what looks like, almost $200 billion in investments to push into the electric car industry?
Yeah, we don't do all the investment by ourselves. So we're joining forces on the fast charging side, for instance, with BP. So with strong, also financially very strong groups with Iberdrola in Spain. So they are financially strong, they're co-investing. So we don't spend the money all ourselves. On the battery side as well, we do some investment internally, but most of it still also with partners, investing startups or established cell manufacturers. What's important is that we define the rules, the technology, and we set the standards there, and this is well on the way. To finance, we finance internally. We have strong cash flows from our ICE business last year, and this year also we're fighting hard to get our, let's say, I wouldn't call it legacy business, but the IV business, the internal combustion engine business, we want to keep it strong and profitable, and we are working hard to keep it strong and profitable.
How long will you keep the internal combustion business? I mean, I know you want to have 50 electric car models by 2030. Am I still going to be able to buy a 911 with a gasoline engine?
You should be able to buy still. I think this transition will probably last 2 life cycles or so until 35 or probably even longer. It depends a lot on the regional strategies and policies. And also I have to say, electrification doesn't make sense in any environment or in every environment because, electrification only works for CO2 reduction on the basis that the primary energy is CO2 free. So you either use sun or solar or hydro. So, and that is why we assume that the regions will have different speeds in transition. Now Europe has really taken over with a strong push now with the new administration in the United States as well. China is keep on pushing, but there might be regions which only come probably 5, 10, 15 years later.
The market has taken this electric vehicle push well, Herbert. You've pushed your stock up to a 5.5-year high, but you're still looking at only about 20% the valuation of a Tesla, even though you plan to sell more electric cars than Tesla does this year, and the growth forecasts are much stronger. Why do you think the market values Tesla so much more, and can you get to that kind of valuation? This transition is not only about EVs, so it's also about the car becoming really a connected device and finally also driving autonomously. And this is a huge value in mobility in general. So we think that the
profit pools are shifting from ICE's conventional engines to electric cars and then to autonomous cars. And, we are a traditional OEM, so we don't get all the credentials of a startup. And we have to prove, but it also works once we prove, and we think that we can prove this year that we are strong in EV, that we are competitive in EV, and then we have to prove that we are strong in autonomous, in software, and then the market will follow. The market will follow. This is a long run. It's not about a year or so. It's about 15 years probably, and decisive it will be within the next 5 to 7 years.
One of the things that people have been talking about for years now is the possibility to unlock value with the IPO of Porsche. The brand is so strong. You've shown today that the results have been incredibly strong. Almost a Volkswagen savior on a financial level. Why not sell the business or a little part of it to the public and boost those valuations?
Yeah, actually, you're absolutely right. Porsche is very strong. They had a very strong year. I think the most, for me, the biggest elevation and which really builds up trust with Porsche is that they're also shifting to EVs very successfully. You never know whether the customers follow this route, but now I think we have certainty. Taycan is selling well. We started a top-of-the-line product to introduce in Porsche, and Porsche has the most aggressive transition plan into EVs, 80% by 2030 already they want to achieve. They are fastest in transitioning their business. They are really strong. When it comes to, but they are also strong because we have synergies, platform synergies with Audi, with the Volkswagen Group. We are producing some of the Porsches in our Volkswagen manufacturing network. That also adds to the value of Porsche. So a standalone for Porsche is probably not what you finally want. They get all the resources they need so they can develop. For financing, we have quite good cash flows out of the ICE business, which allow us to do all the investments we need in the new technologies.
Porsche has done incredibly well with the EV push. The Taycan is impressive, as is the Audi e-tron. I spent a lot of time with that vehicle, and it's incredibly luxurious. And those margins are great. I wonder about the Volkswagen brand business, though. It had a more difficult time in 2020, and how do you see turning that business into a success in 2021, 2022?
I have to say, I'm really happy with the performance of Volkswagen, because they, once again, most of the success in China comes from the Volkswagen brand. Those are the products which are designed here in Wolfsburg. So they are contributing a lot to the well-being and to the welfare of the group. Here in Western Europe, they had a tough year, but I'm very happy with Volkswagen because they are delivering a very nice turnaround story in Latin America. They will become profitable in difficult conditions, in difficult surroundings this year. Also, North America, United States, Scott Keogh is doing a terrific job. The brand is back again after diesel. We are gaining market share. We have SUVs only, and within the next years we will come with EVs. ID.4 comes to America, produced in America, and then the iconic ID. Buzz gets back to America. So I think Volkswagen did a lot, contributed a lot. And they are also strongly focusing on cost now. They will reduce material cost, fixed costs here. So I think they will be in very good shape soon.